Welcome to Alpha Recap, your quick, smart rundown of the market tape. We're looking back at May 11th, where a few big themes really drove headlines. As always, if you have questions, you can reach us at stockalpha.ai. Tom, great to have you here.
Thanks for having me. It was a pretty packed day. A lot of cross-sector action and some clear winners and losers.
Markets closed with strength in energy, utilities, and pockets of technology, while materials and communications lagged. Let's start with the big energy and storage story. The standout was an automaker-led storage move.
Right. Ford Energy pledged a 20 gigawatt-hours battery energy storage system. That's massive by utility standards. It's not just cars anymore. Manufacturers are stepping into grid-scale projects.
So, what really stands out here is, why does a 20 gigawatt-hours project matter beyond headline size?
It matters because large battery systems smooth renewable intermittency. They let utilities stack revenue streams, think capacity and ancillary services, and they create steady demand for batteries. In plain terms, it helps more solar and more electric vehicles actually work reliably on the grid.
And that fed into the utilities narrative, right? There were also notes about fleet electrification.
Absolutely. Reports showed a fleet order of 370 Tesla semis. Large orders like that shift diesel demand dynamics and create predictable new electricity demand, which pushes grid planning and charging infrastructure forward.
Big move.
Not what anyone expected.
Yeah, let's pivot to technology. Funding and product headlines kept a constructive tone. Helsing's raise was eye-catching.
Helsing reportedly raised about $1.2 billion. That level of capital shows investor appetite for security, AI infrastructure, and startups building large language model tooling, even with macro caution in the background.
So, when you step back and look at this, these raises keep the R&D cycles humming. That's a positive for innovation, but it also cranks up competition.
Exactly. More capital accelerates feature development, but companies also face margin pressure as they scale and compete on price and talent.
Crypto had a constructive tone too. Circle backed a $3 billion blockchain initiative, and funds showed continued inflows. What's the takeaway there?
Institutional funding and protocol-level backing help professionalize infrastructure. Custody, regulated rails, that sort of thing. Those are credibility builders. But regulatory risk still towers over the sector. So flows can reverse if lawmakers change the rules.
Which leads us to the regulatory headlines. Cannabis rescheduling notes, DEA registration forms, Clarity Act chatter. Policy clearly moved markets.
Policy was a big repricer. Even preliminary federal steps on cannabis scheduling can change banking access and tax treatment, which directly affects profitability. And for crypto, any clarity on tax or licensing will determine how quickly institutions ramp up.
Right. Now, not everything was upbeat. Materials and communications ran into trouble on May 11th.
Materials were a mixed bag. There were graphite and copper upgrade stories that tie into batteries, but that was offset by steel overcapacity warnings. So demand for battery materials looks positive long-term, but bulk metals face near-term slack.
And communications and media?
EchoStar reported sizable pay TV losses, and there was a headline about an approximately 475 billion euros fiscal gap in the European Union. That combination clouds advertising and subscription recovery expectations. Not a great day for legacy media economics.
Yeah, that tracks. Let's break down the cross-sector themes in plain terms. First, electrification plus storage as a unifying demand driver.
The big picture. When utilities and fleets commit to large battery projects and EV orders, CapEx follows. That benefits a chain of players, utilities, battery manufacturers, grid contractors, and creates a multi-year pipeline. But supply constraints and permit timelines mean the materials sector could see volatility along the way.
Second theme, AI adoption moved from pilots to operations across industrials and security.
Yes, AI is now being used not just in software demos, but to run logistics, reduce dwell times, optimize factory throughput, and detect fraud. Companies that convert pilots into measurable cost savings, like lower freight cost per unit or higher on-time delivery, will separate themselves.
Third theme, regulation reshaping risk profiles.
Policy is the wild card. A rescheduling note for cannabis or a tax clarification for crypto can reprice whole sectors quickly. Market participants are re-evaluating exposures, which increases dispersion.
Can you give listeners the few most consequential moves from the day and why they matter?
Sure. 1. Ford Energy's 20 gigawatt-hours pledge. That signals automakers entering the grid business, which could accelerate storage deployment and shift procurement dynamics. 2. The 370-truck Tesla Semi order. Fleet electrification at scale validates demand for commercial EVs and charging networks. 3. Helsing's $1.2 billion raise. Big capital for security and AI infrastructure. 4. Circle's $3 billion blockchain backing. Institutionalization steps that matter if regulators don't derail momentum. And 5. EchoStar's pay TV losses paired with the EU fiscal gap. A reminder that media faces structural and macro pressures.
Those are the headlines, but what should listeners watch operationally? Specific metrics or signals to monitor?
Track CapEx and contract cadence for storage projects. Procurement timelines, offtake agreements, and commissioning dates. For AI, look for quantitative efficiency metrics in earnings calls, reduced dwell time, cuts to freight cost per unit, or improvements in uptime. On regulation, watch federal calendars for cannabis scheduling and DEA actions, crypto tax or licensing developments, and any communications policy changes in Europe.
Got it. A few actionable informational points for listeners.
Monitor which companies have long-term supply contracts and access to battery cells, because that reduces execution risk. Watch AI pilots that report measurable KPIs. Those are more likely to deliver durable margin benefits. And expect dispersion in materials. Battery inputs and bulk metals won't move in lockstep.
Quick sector one-liners before we wrap. Give me the headline for each top area.
Energy. Storage and renewables dominated. Utilities. CapEx tailwinds from grid modernization. Technology. Funding and AI keep a bullish tone for parts of the sector. Crypto. Pockets of institutional flows, but regulatory tether remains. Materials. Uneven. Battery minerals look promising, bulk metals face overcapacity. Communications and media. Under pressure from pay TV losses and ad uncertainty.
Short reactions.
Makes sense?
Yep.
Right.
Before we sign off, a few takeaways to leave listeners with.
1. Electrification and storage moved from concept to commercial scale commitments. That should support a multi-year project pipeline, but execution and supply constraints matter. 2. AI is delivering operational gains, so look for measurable outcomes in industrials and logistics. 3. Policy remains the primary source of short-term dispersion. Cannabis, crypto, and communications all illustrated that on May 11th. 4. Expect continued sector divergence. Some industries have predictable, regulated cash flows. Others remain tethered to policy and demand cycles.
And a quick reminder, this discussion is informational. Analysts note trends and data, not individual investment advice. We're not recommending any buy, sell, or hold actions. If you want to dig deeper on a sector, ask us at stockalpha.ai.
Exactly. The details matter. Procurement dates, permitting timelines, and regulatory calendars will drive how these stories play out.
All right, that's a wrap for today's Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening, Tom.
Thanks. Talk soon.